All right, today we are diving into a massive, high-stakes bet that's happening right at the heart of the crypto market. We're talking about a financial giant, falling interest rates, and a multi-billion-dollar gamble that could, either save its future or maybe bring the entire system crashing down.
So let me just kick this off with a question for you. What if the financial plumbing of the entire crypto world, a company that's worth over $170 billion, could be taken down by a single market shock, like a 30% downturn? I know, it sounds super dramatic, but as you're about to see, the numbers here are very, very real.
And this is the number right at the center of it all, $6.84 billion. Right now, yeah, it's just a figure on a screen. But trust me, by the end of this, you're going to understand exactly why this specific amount could be a doomsday trigger for the whole world of digital assets.
To really get where that number comes from, we first got to meet the giant who's making this enormous wager. And that company is called Tether. So, Tether, or USDT as you probably know it, is what we call a stablecoin. Its job is incredibly simple. One Tether is always supposed to be worth $1, period. That stability makes it the essential lubricant for the entire crypto machine. It's the financial plumbing that lets traders zip in and out of different coins without ever having to touch a traditional bank.
And the scale we're talking about here is just staggering. As of Q3 2025, there were over $174 billion worth of Tether out there in circulation. That's literally more than the GDP of a lot of countries, all just flowing through this one single system.
The whole thing, and I mean all of it, is built on this one simple promise. For every single digital Tether out there, there is $1 worth of real assets sitting in a vault somewhere, ready to be redeemed at any time. This promise, well, it's the bedrock of trust. But what happens when the company starts messing with what those real assets actually are? And that leads us right to the heart of the matter, which you might call Tether's golden goose problem. You see, the goose that laid all those golden eggs is starting to get a little tired, and Tether is desperately looking for a new one. So this is how Tether holds its money. The huge majority, 75%, is in super safe, kind of boring US Treasuries. But look over here at this other slice. That's what we're interested in. 13% in Bitcoin and gold. This is the new, risky part of the plan. This right here, this is the gamble.
See, for the last couple of years, Tether has been making an absolute killing. In just the first 3 quarters of 2025, their net profits were over $10 billion. They did it by just taking the cash people used to buy USDT and parking it in US Treasuries, earning crazy high interest thanks to the Fed's rate hikes. It was a simple, safe, and wildly profitable business. But here's the catch. By late 2025, pretty much everyone expects the Federal Reserve to start cutting interest rates to deal with a slowing economy. For Tether, that's a direct threat to their main profit engine. I mean, those amazing returns on treasuries, they're about to shrink, big time, maybe even cutting their earnings in half.
So they're at a crossroads. Do they stick with the old, safe strategy and just watch the profits dry up? Or do they pivot to something totally new? Well, they chose new. They decided to take a chunk of those massive profits and bet on assets they think will grow faster than interest rates fall: Bitcoin and gold.
And hey, this isn't some small side bet we're talking about. This is a fundamental shift in their whole strategy. So let's look at just how big this wager really is.
And there it is. As of late 2025, Tether is holding almost $10 billion in Bitcoin and nearly $13 billion in physical gold. That's a combined bet of almost $23 billion on 2 of the most volatile assets on the planet. I mean, to put that into perspective, their gold holdings alone now rival those of entire countries, like South Korea. It's insane.
Now, Tether's argument is that this is actually a really smart, forward-thinking move. They're very clear that they are only using their excess profits, so the money that's on top of what they need to back USDT 1-to-1. They see it as using their war chest to build a totally new profit engine for a future where interest rates are low. But what if this bet goes horribly wrong? This is where we get to the real heart of the risk, and where that number from the beginning of our story comes roaring back into play.
BitMEX co-founder Arthur Hayes, a pretty big name in this space, actually did the math on this, and his analysis, well, it paints a pretty chilling picture of how this could all unravel, not just for Tether, but for everybody.
Okay, let's walk through it. Step 1 is the $22.8 billion bet. Step 2 is a totally plausible market event.
a sharp 30% drop in the price of both Bitcoin and gold, which, by the way, often fall together in a crisis. The result? A catastrophic loss of $6.84 billion. Hey, remember that number? And here is the absolute crucial point. Tether's entire safety cushion, their excess reserves, is only $6.78 billion. The loss from the bet would be bigger than their entire buffer.
The danger here is crystal clear. In Hayes' own words, it would completely wipe out their equity. On paper, Tether's assets would suddenly be worth less than what it owes. It would be, in theory, insolvent.
Now, theoretically insolvent might sound like some abstract, accounting term, but in the world of finance where confidence is literally everything, it could be the tiny spark that ignites a market-wide firestorm.
The second the market even thinks Tether can't honor all its redemptions, a panic could kick off. You'd see traders and exchanges rushing to cash out their USDT for real dollars, forcing Tether to sell its assets, including all that Bitcoin and gold, into a market that's already tanking, which would just make the crash even worse.
And this could trigger a devastating domino effect. First, Tether would break its peg, falling below $1. That would shatter confidence. Then, a cascade of forced selling would flood every exchange. That contagion would spread like wildfire to Bitcoin, to all the altcoins, and to the entire DeFi space. The plumbing of the crypto world would just seize up, creating a massive liquidity crisis.
And we really can't overstate how important this is. USDT is on one side of over 70% of all crypto trades. It's not just a big player. For so much of the market, it is the market. Its failure wouldn't be some isolated event. It would be a systemic, truly catastrophic one.
So what's the verdict here? Is Tether's big pivot a brilliant, forward-looking strategy to protect its future? Or have they just armed a systemic time bomb sitting there waiting to detonate during the next big market crisis? The answer, whichever way it goes, could very well define the future of digital finance.